Right, today we're going to talk about mortgages. Howie, what on earth is going on with the mortgage situation?
Rhiannon, it's a nightmare, and the reason of the nightmare is several reasons. Principally, we've got a huge swathe of the country that are locked in on mortgages where in past they've done 85% loan to value, now with 20% property falls, they're close to 100% loan to value, some in negative equity. So their only chance is basically to ask their existing lender for a deal. Many lenders have gone out of business and aren't offering continuation deals. So we've got people stuck on standard variable rates. Now that's all fine while we're in low interest. So the government is on about a double dip recession. We could have a double dip in the housing market because the system isn't looking after those people. So you've got all the people that self-certified for varying reasons that were true real self-cert case, like self-employed, not necessarily the employed self-certs, because that was a greed factor fed by the pre-credit crunch mortgage lending. However, what we've got is we've got a huge sector of the market that is locked in and can't prove their income sufficiently because now self-cert's gone. We've also got the adverse market, which was huge, which was partly to blame for the credit crunch, but by the same token these people have mortgages now and they're going to be in trouble. Some of them are on LIBOR plus 4 or 5%, which is all very well when interest rates are low. So what we've had happened that killed the mortgage market was when interest rates fell, people were coming out of fixed rate deals that were higher. Now they're making hay while the sun shines, and some are on tracker rates which lenders never calculated. So in a way a lender is subsidising these mortgages, so it's in the interest of the lender to get the rates up as soon as possible. And we've seen that with some lenders putting their standard variable rates up to try and encourage people to leave. And the problem that you've got is that when interest rates rise, there's going to be trouble with people that can't afford things. We've also got, with the recession, business is much harder to get across the board in all industry, and also the fact is now it's cheap. Everybody lives to cheap, and when interest rates go up, we're going to be struggling. We've got people that are locked in on 100% mortgages, and interest rate rises, and if they were adverse self-cert in the past, they're on a LIBOR rate, they're going to be in big trouble. And job security isn't what it was in the past. Redundancy is now a big word in everyday vocabulary. You've got other lenders that won't do redundancy cover because that's hugely risky and that's hugely expensive. So we got big trouble, and then the next part is buy-to-lets. You can't remortgage a buy-to-let because the lenders want stupid arrangement fees, big loan to values, and they're all the same. Many buy-to-lets that we've done for people in the past, and it's across the board, would be 85% loan to value, and they're going to be in exactly the same issue with the property falling. So the whole thing is locked up. So the only thing really that's moving at the moment is clean cases, as in clean credit, no history, and you can prove your income to a lender, and you got a deposit. And we've got a bit of movement with cash buyers now. The hips are going, thank goodness. You might see quite a lot of properties coming on the market, but just because it's coming on the market doesn't mean to say it's going to sell. And there was a pre-VAT increase rush. When the VAT went back to 17.5%, so there was a bit of a surge on properties going on the market before the end of last year, but it doesn't mean to say they're selling.
So basically at the moment, do we just sit tight where we are if we can? And obviously
in general you haven't got a choice, because you can remortgage to another deal with another lender, usually at a cost. Solicitors have been hit quite hard with it because most remortgage packages are offering free legals and free valuation, so that cuts out your high street solicitor. So in many instances they were like doing the hit packs. Now the hit packs are going, that's going to be an income stream gone for them as well. So the whole thing is in a complete utter state of mess. The government wants to lend to small businesses to get the economy moving, but the housing market is certainly stuck in complete lockdown.
Okay, scary stuff. Thanks for
It's very
explaining that.
scary.
Cheers.
Thanks.